the Fed has a tough week ahead of them. It's going to be interesting to see how Jerome Powell takes 7-deuce offsuit and tries to make his way into winning a hand here. But that's what I see this as. And I wanted to, prior to them doing the meeting, which is going to be tomorrow and Wednesday, this is when the Federal Open Market Committee is going to do a meeting, and they're going to talk about how they're going to raise hikes whenever they say. So it's basically this specific meeting is about hiking rates. What's very interesting prior to this meeting, and I have some crazy charts over here I want to show you that's actually going to expose the real truth about what's going on. I mean, when I've been spending the whole day researching this, and wait till I show you some of these charts over here on the right. There's some crazy stuff here. Like you can't hide from it when you look at the money velocity. Anyway, I'll get to those charts in a second here. Basically, they're in the toughest position ever because it's a lose-lose. And what's interesting is the market randomly was down with severity. This beginning of the market open on Monday here was down severely and then suddenly has this big rebound. Now, what's interesting is a rebound right before the Fed meeting to put Powell in a position to go, oh, well, hey, Papa Powell, please don't raise rates on us. Please don't do that. Look, the market's doing just fine. Everything's going fine, Powell. Isn't it interesting how all these institutions and stuff and somehow the market gets propped up just before the meeting? So he just, please don't hike these rates, Powell. Please don't do it. Please don't raise it to a measly 0.9%. Please don't do that. That'll trigger a whole collapse. Don't do that, Powell, please. It's interesting. The timing of it is just staggering to me, but the position that Powell is in, to think that this is just, something that just is not going to cause any type of damage. It's the interesting aspect is not only about stopping QE. So you've enjoyed this printing press, printing $14 trillion. You heard me right, $14 trillion. It's just numbers that's like, it doesn't even make sense. On their balance sheet, however, of the Fed's balance sheet, this is what most people don't talk about, is 8.8 trillion, roughly, a little bit over 8.8 trillion on their balance sheet. It's not just about the 14 trillion they printed and propped up everything. It's what's on their balance sheet too, because they're going to start doing quantitative tightening, which basically unwinds the money that they have on their balance sheet and puts it back in the market. So not only do they stop the printing press, which is what they're saying they're going to do, so they're doing three separate things that is all very negative for the market, and I'll show you the charts on that as well. You're going to stop the printing press. So money printer go burr, no more. Stop that. So, the market's going to love that. Then on top of it, you're going to tighten, which means you're going to get rid of this ridiculous $8.8 trillion on their balance sheet and start putting it back into the market. Now, that to me is what a lot of people tend to overlook, because this is all the treasuries and the mortgage-backed securities that they've been buying. They have to put it back into the market when they do tighten. And I'm going to show you some charts over here that's going to be very interesting about that. On top of all of that, they said once they finish with the tapering, they're going to then raise rates 4 separate times or 5 separate times to get them to 0.9%. So a measly, not even a 1%. Over the next couple of years, they're trying to get it up 1 to 2% when CPI is out of control at over 7%. Which is on their number. The real CPI data that they used back in the 70s and the 80s would show that it's over 15% right now. Just my personal opinion. Whoever's monitoring, disclaimer, just a YouTuber. I'm not a financial advisor. I am just spreading my opinions. Only mine. Strictly mine. Please do smash the like button for the YouTube algorithm to get this video out to more people. But disclaimer, this is only my opinion. Everything I say here could not be true, or it could. It's up to you to decide. Disclaimer, just a YouTuber, not a financial advisor, don't have a Series 7, nothing like that. So you stop the video. I don't know. We've had a couple situations where anyway, if you could smash the like button, would really appreciate it. If you agree with me on this sentiment, please do smash the like button because it helps get the video out to the YouTube algorithm. And honestly, it has been really working. So thank you for doing that. The last videos, the last live streams I've done have gotten quite a bit of views. So I appreciate everybody for smashing the like button. I don't have anything to sell you. I don't have anything to advertise to you. So if you could smash the like button, maybe follow me on Instagram so I have another platform as well, would really, really appreciate that. But let's get over to some of these charts over here because some of these charts will blow your mind. So when we go to the trading view over here, we saw the NASDAQ have a pretty severe pullback, right? So this is there. Let's go to the 5-day. So this is the 5-day chart. We'll extend it a little further. And we saw this pullback in the NASDAQ, which is the tech sector, which is pretty overvalued right now. I like to look at the NASDAQ because it's basically the entire tech sector. You see it fall from 16,000 down, and then bottoms out here to around 13,007. Now, there's an interesting thing that happens here that I wanted to go over in regards to the DXY. You'll see the same type situation when you look at the Dow. Down and then a rebound right there at the bottom, right before the Fed meeting. Somehow we have a rebound. Don't let them. No, Powell. Don't show Powell how bad it is. Just wait till they get through the meeting and we'll prop it up a little bit just before. So we saw that. And then also we can look at the S&P 500, same chart. Literally all three of them, same chart. A little bit more sharp with the NASDAQ because it's the tech sector, which is pretty lofty right now. When I say pretty lofty, I mean it's just price to earnings ratios are non-existent. You're trading collectibles. But anyway, let's get to something very interesting because when you see this go down at the same time, we pull up the DXY, which is the dollar index. The dollar index is going up. So money goes out of the stock market and it's flowing into the dollar, which tells me people are sitting on the dollar, just like I talked about in all the stagflation videos and things on this channel. If you haven't subscribed to this channel, by the way, please do subscribe to the channel. I think it's down there somewhere on my left-hand side. If you could subscribe, would really, really appreciate it. I'm trying to grow the channel a bit. We did, in fact, break over 25K on the channel, so that hypes me up. And now the next target, because I have to always keep pushing. I'm like a politician around here. I got to keep pushing the goalposts a little bit. Now I got to get to 100K. So if we can get to 100K, really appreciate it. Anyway, it's a silver plaque, guys. I like silver. All right, the 100K plaque's a silver plaque. I'm trying to get that silver plaque. I want to stack that. Anyway, back to what I was talking about here. What I have a theory here, and I don't think enough people are talking about this, is that the dollar is not strong due to trust. I don't think it's because it's people trust the dollar. I think that people are scared. There's a big, big difference between trusting something and being scared. And I'm going to go over the theories of what I'm personally doing right now. And I've talked about this again in my prior videos on stagflation, how to protect myself in stagflation, what I'm doing. And part of it has to do with getting a 20-30% cash position ready to go. And the market is showing that. So if you see a market over the 5-day where you see the market selling off, so if you pull the 5-day here, market's selling off, and at the same time, you're seeing the dollar index going up. People are leaving the market and going into the dollar, and they're using that dollar, in my personal opinion, as hot potato money. They want hot potato money because they remember what happened in 2008, 2009. Markets crashed, and you wanted that hot potato money on the recovery. That's what I think is happening right now. I think people are looking at real estate. They're looking at the stock market and they're going, look, things are pretty lofty right now. I want to sit on the sidelines with some cash and be ready to throw it at something. But the key is they're not holding dollars as an investment. They're not buying bonds and they're not holding the dollar because that's not going to protect you against inflation. They're holding it. The reason you see the dollar with strength, again, is not due to trust. It's not due to an investment. It is due to the fact that people are scared and they want dollars to throw at the right opportune moment. And to that, I agree with that theory. That's what I'm doing personally. I think it is a very smart thing. Me personally, not financial advice, disclaimer. I think it's very smart to have a cash position in powder dry ready for an occasion where you might see a bit of a pullback. Now, if we're honest with ourselves, we have to be honest. In the people who are in silver and in Bitcoin and gold, there was a major correlation with equities, which is what I've talked about in prior videos, is I don't want to see that correlation. So we saw the NASDAQ go down, and at the same time, we saw Bitcoin go down, right? So pull up the 5-day chart on Bitcoin. At the same time, is it going down? And then here's how you know there's a major correlation on Bitcoin and equities, which is not what you want to see. So if you're in Bitcoin, everybody who's pushing for the ETF, I don't know why you were. I was one of the people that came out and said, hey, if it's not a spot ETF, I don't want to be involved in that. I think this is not a good idea to have an ETF, because once the stock market gets their clutches on something with an ETF, you start seeing it correlate. And basically Bitcoin exactly correlated with this reversal, which is crazy. You see it go down at the same time. This is literally today. So this is today's reversal. You see the market was crashing, boom, recovers exactly the same as the market. Literally the same little cup right there at the bottom, peaks right back up. This is a perfect correlation. And if we're honest with ourselves, in silver as well, there's a correlation there as well. And silver trades right now, so the market's closed on the NASDAQ and like the regular equities, but silver's trading right now, which that might be part of a read right there. If gold and silver's down a little bit right now, we might see a market open where the market goes down a bit as well. But it's crazy seeing that exact correlation from assets like Bitcoin, like silver, like gold with the market. And you don't want to see that. And that's what happens with these ETFs. It makes when the stock market sells off, it's hitting assets that should detach and go up. People should be going into these in this type of a situation, which is wild. And I'm waiting to see that detachment. And we've seen it a few times. And that's live feed I did on silver. I talked about how it was detaching that day. And literally the next 2 days, silver skyrocketed up almost $1. And that was because it was starting to detach from the market. And so once we see that sentiment change from the market's going down, now you see silver and gold going up, and you see Bitcoin going up on the day that the market is going down. That is what I'm looking for, is when that money that's sitting on the sidelines, it's going to realize, hey, I want to have safe assets. I want to go to some safe haven places here. And it's going to throw that money that's on the sidelines into those safe haven assets. But in the near term, there might be an opportunity to stack those safe haven assets. Anyway, I want to get to the next chart here. So I wanted to show that correlation quickly between the NASDAQ and the DXY and assets against it as well. It's just crazy how correlated it all is. And to me, I see this as like a false jump right before the Fed meeting to try to get Powell not to raise rates, which he has to because the CPI is out of control. So he's stuck in a really tough position. But here's the charts that are juicy. This is going to be the fun stuff. So if you haven't liked the video yet, maybe wait until I show you this information and then like the video so you can get this out to more people, because it turns out on my last live streams, when you do hit the like button, it does in fact help spread the video, because last I think the silver one got like 10,000 views, which is not too normal lately. So it is starting to help with the ratio and getting my channel out there to more people, despite talking about some controversial type subjects around here. Disclaimer. It helps, I think. So hitting the like button, appreciate it. And if you haven't followed me on other social medias, please do that. I'm on Instagram. I'm on Twitter. It helps me have a little bit of diversity there. But anyway, here's the chart that'll blow your mind. So this chart here goes over the Fed fund rate and how much assets they have on hand. Now, this is a juicy chart because it really, when you know how to read this specific chart, it shows you everything. And I'm excited to show you this. So I think my face, my ugly mug is down here somewhere in the left, but this is 2009, 2010 over here. And so I just want you to know that, because I can't move that while I'm live. But up here is when the rates were around 5%. Now, this is back when they actually had it at a reasonable level to combat inflation. You know, it was up at 5%. This is back in 2007. And basically what they did is we went through the recession of 2008, 2009, and they had to drop that all the way down to zero. So I don't think, you might not be able to see this right here, but it goes down in 2009. There you can see on the just right-hand side of me right there. It went to, you know, the federal funds rate was 0.11, which is pretty much, zero. All the way from 5%. Now they do that. Now this is what is so key about this chart. They do that to use as a tool, part of their tool chest. You're going through recession. Okay, well, we'll drop rates down to zero so it makes money really easy to get. And now that'll spark people getting loans, and it'll spark the economy because money will be so easy to get, right? So this is what they did to get us out of 2008, 2009. They basically dropped it down to pretty much zero, and then their total assets, they started buying up assets. I wonder if I can move me while I'm live. Hang on. Let me see if I can do this. I can. Look at that. Look at that. All right. Yeah, let me get me out of the way. Never mind. I'm getting smarter in here, you know. I'm not college educated, by the way. If you needed a college education to talk about this kind of stuff, I am not your guy. I'm just a simple squirrel around here. All right, I'm just. But I'll tell you some information you might not be looking at because I have all day to be looking at this stuff. Sorry, pal. But anyway, let's get to this chart here. So this is right here is 2007, 2008, right? And you go down. And so here's what they do. They drop rates right here, peak recession. Keep in mind, this is peak recession, right? This is right when we were going through the last recession. And this is just a housing bubble. Now we got a currency bubble that they keep inflating. But anyway, I digress. Their two tools here was to start buying securities, buying the treasuries and the mortgage-backed securities, right? That's what they were doing. They bought. And keep in mind, they only bought $2.2 trillion in 2008. Just over $2 trillion, right? So they bought $2 trillion worth of assets. They dropped rates down to zero. Those are their two tools in their tool chest. Buy up stuff, buy stuff off the market and drop rates down to zero. These are their main two tools. Now, this is why I find it to be such a scary scenario, what we're going into this week and what they're trying to do, because they've already done that. Like, way more. Look at this inverse here compared to the last recession. You saw the stock. This is the beginning of everything in March of 2020. It makes me stutter a little bit from how scary and obvious this is. Like, this is data. I would love to sit down and talk to Jerome Powell. Like, can you explain this? Can you please explain this chart to me, Jerome? Because this is very scary. So you used to, when the market was good prior to a recession, you had the rates up at 5%, which is normal. Okay, that means when you go to get a home loan, it might be 7-8%, something like that, and the rates are 5% for the banks. Makes sense. There's money to go around. It's a fair situation there. But here we go from we were already only at 2.4, so we were still recovering. Keep in mind, this is rate hikes here, guys. That's rate hike. We're recovering from the last crisis of 2008, and then we get to around 2.4% on the federal fund rate, and then guess what? They've already dropped it down to zero. It's already at zero. This is what they're supposed to do after the recession or in the middle of a recession, not at market highs, not having it at zero at market highs. This is the tool you use when you're going through it, not prior to going through it. They've used all the tools in their tool chest prior to anything happening. And keep in mind, CPI is at 7% right now and climbing. It is not transitory, and it is going to start compounding on top of that if it keeps up at this rate, which is, and if we go by the CPI data, again, back in the 70s and 80s, it would show that we're well over 15%, maybe even 20% at this point, which is very, very, very scary because, again, all the tools are used. But this is where it gets just staggering. They changed their balance sheet. So this is the last recession. If I was around in 2008 and 2009, if you can believe it, and I was watching this, and I remember it was like pandemonium. This was people were totally nervous, and the circuit breakers were breaking, all of that. Well, no, that didn't happen actually until 2013. The markets were just collapsing. But here's another aspect too. I got to talk about that next, but I've always talked about on my channel this funnel type thing. I'll wait for a little bit to get into that because I still want to go over this asset situation here. So I got I get distracted from time to time and ramble, but hopefully the information is worthwhile. If it is, please do smash the like button. I think I've said that 12 times now. So if I've annoyed you, I apologize. Here's the crazy part. Back in that recession, they got a little bit over $2 trillion. Now they have over $8.8 trillion on their balance sheet. Yeah, that's real. That is absolutely real. They 4x'd how much assets they had on hand in 2008. And keep in mind, they kept those assets on hand. They tapered a little bit, right? They started doing basically this is them selling, right? But they just kept adding. And just as they were starting to get rid of these assets, they were letting it go down. They were raising rates, trying to do the right thing, And then, this actually shows progress here. You're trying to get rid of it. You're trying to sell it in the market, and you're raising rates at the same time. This right here is progress. And then what happened, at the beginning of all of this, and we had the shutdowns and all of that, but to see just how much they bought is staggering because they went from here, they went from $4 trillion on the balance sheet to $8.8 trillion on the balance sheet and climbing because they're still doing QE right now. The thing is, if the market was selling off right now, that's the scariest part because they haven't even done anything yet. They have signaled that they're going to do something, but what they have done is bought up a ton of treasuries and mortgage-backed securities, and now they're talking about selling them back into the market. So the market is going to get very solvent, right? The market is going to get more and more of this, but there's not going to be a demand for the solvency. And then on top of it, people are wanting their money out of the market and putting it into dollars right now for hot potato money on the side, which is just crazy to me. But here is the craziest part is when you bought all of these assets, you're already at 0%. The federal fund rates is already at 0%. All you can do is bad things right now. There is nothing they can do besides give bad news. If you're looking at the real data, at least, because this is a chart that, I mean, if Powell saw this specific chart, he would do this. He'd be like, I don't see it. I don't see it. I don't know. What are you showing me? I don't see it. I don't know. Can someone else ask a question, please? I don't know what this chart means. I don't know. Because it's embarrassing. But here's another chart that'll blow your mind. This is another one not enough people are talking about, is the velocity of M2 money stock. This is basically how much money people are moving around, how tight people are being with their capital. This is how tight people were being with their capital from 1960 all the way until today. Now, you notice something interesting here? Even back in 2008, it was still at 1.9, still at 1.7. People weren't that scared. People were still spending their money. I mean, this was a major, major recession here. 2008, 2009 recession was serious. And they still even when the recovery came, they were still at 1.7. I mean, it was still up there. People were still moving their money around. But what is going on, Powell? Mr. Powell, what is going on? I thought you said that this is all transitory, but from what I see a dollar index going up, right? Hang on. I see a dollar index going up. I went to the Bitcoin chart and said going up. Same thing. I see a dollar index going up, and at the same time, I see people being very tight with their money. What does that tell you? They're tight with their money. They don't want to spend the money. The money velocity is extremely low, which basically says, I don't want to spend my money. I want to put it under my mattress. Don't want to spend my money right now. And at the same time, dollar index is showing strength. And then you're also seeing the market pulling back with a head fake recovery here, headed into a situation where they've already used all their tools in their tool chest. They've already used them to the max too. Like they were like, they had a hammer and a nail and they hit the nail until the hammer was broken. Like they have no more tools. The tools are done. Now they're picking up the broken hammer, trying to hit the thing and there's nothing they can do. And that's what we're seeing here. And so going into this specific meeting with everything going on with the CPI out of control, raising at rates like back in the 80s, even back in the 80s, the inflation wasn't like rising at this level of hundreds of percent this fast. It was 1.4% in January of 2020 and then of 2021 and then 7% by the end of the year. I mean, that's ridiculous rates of jumping there. And we haven't seen that in a very, very long time since stagflation, which I've said we're pretty much in stagflation right now. I've done quite a few videos on that. If you're not subscribed to the channel, please do subscribe to the channel. I'm always shilling to subscribe to the channel. I won't do an advertisement, but I will shill to subscribe to the channel and follow me on other media platforms so I have a little bit of other areas as well. Really do appreciate you guys doing that because actually when you do that, I have other platforms to kind of keep the other. Anyway, let me go back to this stream here. So I wanted to go over this chart, but the other thing here too I wanted to show you about was the gold to this is the gold to the federal balance sheet. So the federal balance sheet is basically the growth of how much they have on their balance sheet, how much assets they have on hand. So this just shows how much the Fed is buying. But at the same time, gold is at just at the levels that we saw pretty much in 2011, 2012. So assets are extremely low, and the Fed is buying up tons and tons of mortgage-backed securities and treasuries onto their balance sheet at a level like never seen before. I mean, that is not the same. When we went through the last recession, see here in 2008 and 2009, you see that there's just a minor jump. But look at the detachment back in the last recession. Gold was above for a long time, and then it detached a little bit. But then to see that level of a detachment, I mean, like who are they fooling? Who are they fooling with this? I mean, come on. The detachment is so obvious. It is so crazy how much assets they've bought and are holding on their balance sheet that they have to dump. And there's a whole nother thing about interest rates and all these things that affects when they do put that back in the market, when they do unwind. When we talk about repo and all of that stuff, I mean, they're going to put themselves in a situation where if the repo situation goes through it, you're talking about rates of everything going up. I mean, credit cards, home loans, auto loans, everything could skyrocket through the roof based on how negligent they have been. But we'll get into that into a different video. But I wanted to talk to you guys about these specific charts and just showing the true data here going into this market. There's so many people that will like talk for like a 10-minute video and they don't show the real data and they don't really do the research to show what's going on. And when you actually see this, and it's really not that complex, they try to make it into this super complex thing. You don't need to be an economist, a college-educated Harvard economist to read these. Usually the college-educated Harvard economist goes by like Janet Yellen or something like that and doesn't know what day it is of the week. But anyway, just my opinion. I don't know, but that was pretty much what I've gotten the assumption that usually the college-educated ones, they go by that kind of metric. Usually Keynesians, because they've learned Keynesian economics. Austrian economics is usually for the college dropouts. Anyway, I don't think they teach that stuff in school. They don't teach the Austrian economics stuff in school. But $8.8 trillion on the balance sheet. They're saying they're going to unwind. They're going to put it back into the market. And at the same time, they're stopping the money printer. And you got Powell going up there on stage basically going, what are we going to do, guys? We got CPI out of control at 7%, inflation out of control. Oh, yeah, and the economy is just, it's just a transitory thing. The economy is going to be just fine. Everybody's going to go back to work. There's just a couple supply constraints. That's what he's telling us. There's a couple supply constraints. Really, Powell? A couple supply constraints, really? Then why did the money velocity go from 2,000? Was there supply constraints like this whole time? Because this whole time people are hanging on to their money. They don't want to let go of their money. They're being more tight with their money than ever before, and it's not changing at all. At the very, very bottom, it was at 1.1, and it's currently at 1.19. 1.119, excuse me. So like it is still at the bottom, and it looks like it's still going down. So when you say, the economy is going to get back together, people are going to start spending their money. Well, the data shows otherwise. So where are you getting this data from, Powell? Did Yellen give you this data? Who is the one who hand-fed you this data? Because from what I can see here, the data shows very clear the dollar is strengthening due to a lack of trust, due to people being scared and wanting hot potato money on the side ready. And at the same time, it proves it from the money velocity that the money's not moving around. People want to hold it. That this is all telling me that Powell is bluffing like no other bluff you've ever seen in a poker match. He's got a 7-deuce offsuit, and he's gambling with $14 trillion and climbing, and he's almost at over 30. There's almost over 30 trillion on the deficit on the debt clock right now. And so you're sitting there. He's gambling with about $14 trillion, looking to go up to 20 trillion. And he's like, you know what? 7-deuce offsuit. Somebody's got aces. We haven't seen a flop yet. I'm all in. Everybody else's money, not mine. I get to bet on it though. So I'm gonna go all in, but I'm gonna make a side bet against it. Like that's pretty much how Powell's going right now. He'll bet. He'll make the bet with his money in whatever direction is gonna favor him and make him a millionaire, right? But I digress. He bought all of those specific securities that the Fed bought with our money, with the people's money, and made off, and then said, "Oh, we won't do that in the future. That might have been wrong." But he still made a bunch of money. He didn't do it anyway. So wrong. So wrong. The other thing that the Fed has talked about in the past is how they've already, going into this meeting and based on the prior meetings, they basically have said, we see equities as being kind of expensive right now, and we see assets as being kind of cheap right now, which is true, but you really, if you're in the stock market, you don't want the Fed saying that. You don't want the Fed saying, the equities are kind of high priced right now. Maybe we might raise rates on you. Maybe we might do that. If we see equities as high priced, that means that they're preparing you for a major correction. If the Fed sees it as overvalued on it, then people being risky in the stock market, which is pretty much what they said, then they're going to see that as an opportune moment to basically prepare you for a correction in the stock market. And so if they use that to their advantage, now the interesting aspect here for Powell is if they raise rates, you cause a stock market collapse or a major pullback, major correction, And at the same time, even if you raise rates, because they've made it into this thing, because they just don't want to peel the Band-Aid off, it's like they're wounded and they're slowly peeling this Band-Aid off, making it 10 times worse because it feels like there's a weight dangling over it, the whole stock market. Because Powell just can't go, hey, we're raising it 2% today. We have to. CPI is out of control. If they really were wise, they would do what Paul Volcker did back in the early 80s and raise the rates back up to 20% and just do it. And yeah, you're going to have a market correction, but when you do the right thing, there's going to be some repercussions. And you got to do the right thing at some point. But because they've made it into this thing where it's like, oh, we're going to raise it. We're going to raise rates. Oh, we might do it. Oh, we might raise the rates on you. It's like the anticipation of that. I'm sure everybody in the audience knows what I'm talking about. It's the anticipation that it's going to happen. You don't want to do that. It's like you see like a kid getting their, like a young girl getting her ear pierced or something, and they just do it quick. Just get it out of the way. And then there's no crying. It's just done. They got it done. It's like sitting there with that piercing thing with a kid crying in the seat going, I'm going to get it. I'm going to do it. I'm going to do it now. Maybe I'm going to do it. Maybe tomorrow. Maybe the next. I don't know when I'm going to do it, but I'm going to do it. I'm going to do the piercing. It's going to happen. And the kid's just in there like delirious. Like, no. Oh my God. Can you just get it done? Please. Just get it done. That's what I see going on in the stock market. They're just making everybody get so much anxiety. And that's what's happening. And then you see guys like, Meet Kevin breaking the internet who is, oh, I'll never sell. I'm never going to sell. Diamond Hands forever. Buy my Diamond Hand merch. Oh, guys, I just sold my $20 million portfolio. I'm really scared now because I probably watched some Rob Sultan videos and he actually made some really good points. And I know I told you guys to keep buying, but, I sold out. That's pretty much what happened recently with your top Diamond Hand GameStop, AMC guy, Meet Kevin out there. He just said, oh, I'm going to sell everything. I'm going to sell everything. Probably because he started looking at the real data. Anyway, it's just crazy. And to see that was, that's pretty obvious there. This is an individual that profiteered for the whole time throughout this market run-up, made a ton of money, and off not only that, but off of giving people advice in a way in his stuff, and took this situation to go, I'm selling everything. I sold out of everything, and then make videos about it after saying like, oh, you got paper hands. You got paper hands. Well, guess what? I talked about this in the past. People with diamond hands eventually turn into paper hands because they're going to try to take those diamonds off the shelf. And then the people who are left out are the ones who took the advice and didn't watch the latest video or whatever. And so that's what's going on right now. You're seeing a lot of people getting scared and realizing, oh, wait, good news is still bad news. If they raise rates, that's bad news. If they raise rates, it's bad news in multiple fronts. Because if they raise rates sooner, that basically shows that they're raising rates, but it's not enough to stop inflation. If inflation is at 7%, which I don't really agree with that number, I think it's more like 15%, but say it's 7%, just to me, the 7% that they say, is raising it 0.25% in 4 different increments going to actually affect that? Excuse me. No. Not a chance. It can't affect 7% inflation if you're raising it at 0.25%. What is this? But because they've turned it into this anxiety thing, they're acting like they're doing so much. And so by making it like that, they're acting like they're doing so much, but they're really doing very little. So they should have just done it. If I was in Powell's position, I would be like, hey, we're raising rates to 5%. Deal with it. We have to do it. It is what it is. But I wouldn't be like so much anxiety. I would just tell people, look, at this date, it's going up 5%. It's going to happen. And it has to. And I don't even think that's enough, but we're going to do 5% first. And then if that's not enough, we're going to do 10% to stop this inflation. But inflation's at 7%. So I obviously have to raise rates higher than that. We're not even at a rate that we had prior to 2008. They had it at least at 5% back then. It's crazy that they can't just own up to it. Just own up to it. I'm a college dropout in his 20s, and I'm telling you that the real data is, I've looked up the real data, maybe because I didn't go to a college class that taught the false data, that you're supposed to be fraudulent. Keynesian economics is basically, how do we get away with this crime? Like, how do we get away with it? Oh, well, we'll do this, and that, and we'll do quantitative easing and quantitative tightening. And then if that doesn't work, then we'll basically drop rates down to 0. And if that doesn't work, then we'll go here and we'll do. It's like they're constantly trying to get their way out of it and not own up to it. You ever met somebody like that just won't own up to it? But if they owned up to it, it wouldn't be that bad. They just said, hey, look, I did what I did. This is what happened. How can we fix this? Instead of just being like, look, maybe next year we'll raise it a tiny bit and I'll do this, this, and that. It's not that bad. Everything's kind of okay. It is what it is. Like, I'm so sick of it. And I just I'm using my channel to call the bluff. If you notice, this video is brought to you by Rob Sultan. I don't have anybody to bring you this video by. So if you could be so kind to subscribe to the channel, I'd really appreciate it. And follow me on Instagram and follow me on Twitter and all of that, because that's my way of branching out a little bit. But I just do these videos to vent. You all in here are like my therapists in a way, because I'm going, am I crazy? Am I crazy? Because this doesn't make any sense at all. I don't know how this is going to fix anything. And going into this, it's a lose-lose situation. I mean, if they're raising the rates, market tanks. If they raise the rates, it's not enough to stop inflation. There's no way out of this. And what I think could happen, and I'm going to do a video actually after this one. I also want to do the Monday motivation videos as well on the channel. So if you're not subscribed to the channel, again, please do click that subscribe. I got some videos getting dropped. And if you want like the notifications on it, if you hit the bell after you hit subscribe, so you click subscribe and then the bell afterwards, I promise it won't hurt you. It won't hurt you if you click it. You click the subscribe and the bell. I know that I watch the videos too, and I'm like, I'm not really going to do it. I'll keep watching the videos. There's nobody watching me. I'm not going to click the subscribe. But if you do it, would really appreciate it. It really does help the channel. If you hit the like button, it really does help. And I want this information to get out there to more people. And then I'm also giving like a heads up too, because the notifications sometimes don't work that well. I've been going on my Instagram and putting in my story, hey, I'm going live in 10 minutes. And I did that on this one recently. So if you follow me on Instagram, you get a heads up of when I drop videos, all the collectibles I'm into, that kind of stuff, and kind of the stuff I'm doing behind the scenes as well on the Instagram. So really been posting a lot there. So appreciate you guys following me on the Instagram. It's in the description, but at Rob Sultan on Instagram, can't miss it. But we will get to the comments here in a second. I'm seeing comments coming in. I'm on full blown rant mode right now, guys. And specifically these charts that I was looking at earlier really got to me. When I looked at the money velocity chart, that's just so obvious. The data there is so clear that people are holding on to their money and they're scared right now of a coming recession. And then on top of that, when you see that mixed with how much assets they have on hand in comparison to the last recession and how they've already used the tools in their tool chest to be at 0%, I mean, the data is very clear. It's very obvious. The dollar index is strong because people are scared and they're holding dollars. I mean, this is real information, real data that it's unavoidable. And then also here's the scariest one. Let me just do this real quick because this is just mind-boggling. Let's look at the year-to-date. I'm showing you the 5-day chart. Let's look at the year-to-date chart and look at the actual real data here. But let's scroll it out a little bit more because this all started in March of 2020. So you think that that's pretty bad. Oh, whoa. Then you start realizing this looks like a fountain here. It's like a fountain that's just pouring out. But let's pull back. So March is when we saw the beginning of the shutdowns and everything. The market was right there at a little bit under 7K, 6,800 on the NASDAQ. And this just shows you how much the tech sector got blown up. Tech sector goes from here all the way. This is $14 trillion in stimulus. 14 trillion, 3 trillion, another 3 trillion, another 3 trillion, 14 trillion, all the way up to there. And then now they're saying you're going to turn off the money printer and sell back those securities back into the market right here and raise rates at the same time. And you think that little rebound candle, that rebound candle doesn't show much conviction to me. To me, I don't know if this, when you look at this chart, does that look like a chart you think is going to go through the roof right there? I don't know. I don't know about that. The only way it goes through the roof is if Powell gets caught bluffing and basically says, look, I was bluffing and we're going to run the printing press and I'm going to kick the can as far as I can down the road so the next person, actually, I shouldn't have even tried to go for another term on this Fed chair thing. I should have probably got out of the Fed chair position, to be honest, but I don't know why I did it. I wanted to make some more money, I guess. I'm going to have to kick this can down the road another 3 years somehow, and he might start the printing press. Might do that. You never know. If he does that, the dollar will collapse after the stock market gets briefly pumped up a little bit. But then after that, the dollar collapses because he ruins the currency. And I would argue both happen inevitably in the future. So it's like it's just kicking the can further and further down the road until this inevitably happens. Now, what I want to see, what would get me to take my cash position off the sidelines, which I do have a big cash position on the sidelines, what would get me to do that would be if I saw a major detachment, which I saw recently in silver. So I did buy some more silver recently. I did buy some Bitcoin recently because when you see a detachment, that's what I'm looking for. But right now, it's scary because I'm seeing a correlation. I'm seeing equities sell off, and we have to be honest. I'm a silver stacker. I love silver. I like Bitcoin. I like all precious metals, really, except I'm not as big on gold. But anyway, I like assets right now. We have to be honest that there's a correlation between the equities market and assets right now. That detachment isn't there. And in 2008, 2009, metals sold off. Metals sold off and Bitcoin didn't exist yet. Bitcoin came to existence after that collapse because, Satoshi was scared about it and wanted to fix the system. But the market sold off 2008, 2009 in metals, and then there was this major, major rebound. So there was the hot potato money that bought the bottom, and then those assets skyrocketed. Now, we might see a detachment prior to that. So my theory is this. If I owned no assets right now and I was all cash, I would be losing sleep, period. I might be in a position where I time it just perfectly right, but I would be anxious. I would be losing sleep. So I think it's foolish to be all in, and it's foolish to have none. I couldn't sleep if I didn't have my assets. If I didn't have, and again, with Bitcoin, actually, that's something I want to talk about with Bitcoin recently, is that I see this is not just like, it's not just a bet of this goes higher. It's how do I get purchasing power outside of the system? How do I have purchasing power outside of the banking system? Because the banking system, this is one of the things I wanted to talk about when I was showing the charts. I see it as this funnel because a lot of people forget that if that market sells off 7%, it breaks the circuit breaker, which is like, how do you even allow that? How can you even do that? Oh, too many people are selling. Don't allow them to sell anymore. They'll do the ultimate Robin Hood. Did you know that? Just so if you didn't know that, hit a like button. If you didn't know that, hit the like button. If you did know that, still hit the like button and help this information get out there to more people because it'll warn people. But they have a circuit breaker that if the market collapses more than 7%, they can just stop the stock market. So when GameStop was collapsing and everybody was in GameStop through Robinhood, and Robinhood just made it so that you could only sell or you couldn't buy it, they make it so that you can't do either. You can't even sell it. You're just stuck. They just stop the whole market. They're the ultimate Robin Hood over there at the Fed. It's like they can literally just halt everything. Nope, down 7%, halt everything. Now, here's the interesting part. What happens when you don't have money outside of the system? What happens if you only trust the banking system and you got to be, 6 feet apart going into the bank, right? And the bank's doors are shut, the stock market's halted, and they don't have the cash on hand. And meanwhile, the cash is already wildly diluted and not back to anything in the first place. Imagine that system playing when you realize that all of the money is digital, like not all of it, but 90% of it plus is digital already. So when they say printing money, it's digitally inject. You can't print trillions. They digitally inject this money. The amount that's in paper is like 5-10% is paper. And so really it's digitally injecting numbers that are back to nothing. That's what this all is. It's like the ultimate Ponzi scheme. And just my opinion, disclaimer, not financial advisor, college dropout, not a Series 7, none of that. Don't have Series 7, Series 9, none of that. Just YouTuber, college dropout, kid. All my opinion, disclaimer. Hey, this video's kept going. Look at that. The video's still on, everybody. Let's go. This is all we had to do to keep hitting the like button and get this information out there. But what I see it is like this funnel. So if you trust the equities market and the equities market halts or something like that, and say you were lucky enough to get out before it got halted or anything, and you also have to trust your TD Ameritrade, your E-Trade, your Scottrade, your Robinhood or whatever. You got to trust that they actually own those equities. So you have to hope that it's actually there. They might not even have it. You never know what's going on over there with the repo markets and everything that they do. But so say you were in the perfect position where you sold out, you got it out there, but say you even got it through that constraint and the possibility of them shutting down the entire market and you were able to sell prior to that, then you got to put it into the bank. So you got to hope the wire transfer system is working. So if there's a market collapse, maybe the wire transfer system already did go down for a day. I don't know if that went over a lot of people's heads, but the Fed wire transfer system, which is like basically a one node system that is the most outdated, ridiculous mess of a system. I mean, you have so many ways to instantaneously send money and the Fed still can't figure out how to get it done within like a 24-hour period or whatever, within a ton of paperwork. Fed wire is the worst thing ever. It makes Bitcoin look so smart. But anyway, You have to trust that their Fed wire system is working. You have to trust that the ACH system is working. You have to trust that your check is going to go be able to be cashed and get that into your bank. Then you have to trust that the bank is solvent. And if it's over $250,000, then you're really in a tough position because it's not even insured by anything. It's not even insured by the people that don't even insure the money that it's back to. It's that bad. So if you go to the bank, you got to hope that it's getting out of the bank, and then it's going to might be like a Turkey situation or whatever. I think it was in Turkey recently when the banks, you can't even get the money out of the bank. So then you go to the bank, you got to hope that they're solvent enough to give you that money. And then on top of all of that trust, that entire trust funnel there, you have to hope that the dollar doesn't crash if you did get it out. And if you got it out, who's going to accept the dollar? So it's like it's the craziest trust funnel I have ever seen ever. And when you own Bitcoin in your own cold storage, you own silver and gold in your own safe, you have money that is outside of that system. You have purchasing power outside of that crazy funnel banking system. What I just described to you is literally the funnel of the banking system. And I, for one, couldn't sleep at night if I didn't have a way to have purchasing power outside of that system. I hope that makes sense to a lot of people. And I try to break things down to be more simple and not try to be too complex with things on this channel because, I mean, I'm just a simple person myself. But when you really look at the truth of what's going on, this entire market is the ultimate Robinhood. It's not just Robinhood that's sketch. It's the entire system that is completely just baffling to me that more people don't see this. So if we accept that the money, 90% of it is digital, then I think it's foolish to have no Bitcoin in the cold storage. I think it's foolish to go all in, as they now are admitting. Now they're going, oh, wow, there's been a pullback, and it's fallen from 60 some odd thousand down to 30, 37 now, 36, 37 now. They're wishing they had some money on the sidelines. And I've been talking, if you go back to my prior videos, the good thing about YouTube is you can go back and call people out. You can go back and see videos they posted from a year ago. You can see videos they posted a couple months ago. And a few months ago, if you go back to my stagflation videos with the whiteboard and all of that, after this video, if you want to go check that out, the stagflation videos, I posted those about a month ago, maybe more. And I was talking, hey, I'm getting 30% cash position together. And I was just being blatantly honest with you guys. I don't like to say like, hey, buy this, buy that, or whatever. I'm not that guy. I can't give out advice. I'm not a financial advisor. But I did tell everybody, hey, I'm getting a cash position together. I want powder dry. And turns out having powder dry is very valuable right now. And I think it's going to be more valuable even in the future to have a position dry. Now, even better than having, 20, 30% cash position is having consistent cash flow. Now, if you have consistent cash flow, you have your own money printer. You're your own Powell in a way. So if you have a business that's producing cash flow, if you have real estate that's producing cash flow, then you can just consistently be buying what do you think is going to be the right thing throughout this situation. And it could be silver. I think silver is proving to be very resilient. It was actually had a nice up day on silver. So even people in Bitcoin, they can't deny this. And I'm excited to see how many people are in Bitcoin and precious metals, and they're starting to realize, hey, it makes sense to have 5-10% on my balance sheet and have that as, have digital money outside of the system. I can see that as something that's interesting. I like to see this bridging of the gap, but no one can deny that. Look at this silver chart. Silver just boomed. It's showing how much it's bottoming out. Like here you're seeing it starting to bottom out, and that was a nice spike there that got it up from the high 22s, and then it peaked up to 23.6 and still holding over this peak, this spike up. And this is just on January 18th. This isn't that long ago. And so it spiked all the way up to 24.6 something, 24.68. And then now it's still at 23.76, even on a little bit of a pullback. This is showing me that tomorrow's open, I think, is going to be a rough one because the market's open for precious metals, but it's not open for the U.S. equities right now. And so the equities closed with a nice spike up, which was right here, and you're seeing it starting to pull back down. Now, this right here showed me something very interesting, and I don't think I've talked about this just yet, that when you see silver going up like this, you had a spike in silver, and this is from the 18th, 19th, 20th, 21st. And then you go back to the NASDAQ at the same time period. Let's go back on the 5-day. So the 18th, this is what I want to see. So look at this. This is a very telling indicator, and this is why I talked about why I thought silver was going to spike back then. And you can go back and watch that video on silver. And thank you, everybody, for hitting the like button on that video because it got it out to a lot of people. I think it's over 10,000 views on that one. But so let's look at this exact date here. So January 18th, here's the January 18th, You see that this is the NASDAQ. This market sells off, continues to sell off all the way to the 21st. But what did we see on silver? When it was selling off from the same time period, silver was spiking. That's the detachment I'm looking for. That's exactly it. Because if we see silver detach, silver could start rocketing. And this goes for all safe haven assets, really. If we see them detach, even gold, I think that it could go up as well. And I also see, I'm looking for that with Bitcoin, but we have to be, this was what I want to see. This is what would change the market from what we saw in 2008, 2009, 2010, 2011. When we saw it spike from that time period, we saw market collapse in 2008, 2009, and then silver spikes up to its all-time highs of 48 in that time period. Now, what I think could happen is you see silver detach and just skyrocket, even if the market is collapsing. Maybe safe haven assets do collapse because, again, we have never seen people holding this much cash on the sidelines like this, being this tight with their cash. That tells me people are being tight with the cash, looking for a safe haven to throw it at. And I think that those safe havens will be silver, platinum, palladium, gold, Bitcoin. Those types of things are the places people are going to want to throw that money. And it might even be real estate. Some people have been telling me some stuff about real estate that's getting me to bite my words a little bit on the real estate situation. But if you're in a situation in real estate where you have cash flow coming in consistently that's paying the overhead and covers the property taxes, which I like to call unrealized capital gains, if that's happening, then you're in a good position. If you've done all of your research and you have enough money coming in from cash flow to pay off that asset, that makes sense. I understand that. But I'm talking about real estate where if someone buys a house to live in it right now, I think that's a scary situation. I wouldn't want to buy a house to live in it because you have unrealized capital gains taxes. You have a target on you of I can get this person year over year for unrealized capital gains taxes on their property taxes. I call it unrealized capital gains taxes because that's really what it is. But I think that there's so much money sitting on the sidelines waiting to be thrown into safe haven assets. And so if you bundled, all of precious metals in one place, and I talk about this all the time, even if you took the entire crypto market. Now, I'm not calling the crypto market a safe haven asset. I think Bitcoin might be, but that's the only one I'm into. But let's say you took all the crypto market and you took all the precious metals and you put it into one bundle, you're talking less than $15 trillion. When you have hundreds and hundreds and hundreds and hundreds and hundreds of trillions of dollars out there, that's in the bonds market, that's in all of the different real estate around the world, all the equities around the world, all those hundreds of trillions of dollars, it's somewhere around like 1.2, 1.3 quadrillion, I believe, has to find a place to go. You think it's not going to find that little tiny $15 trillion space? I think it is. I think that $15 trillion space is going to turn into $100, $200 trillion space. That's what I think. I think all the precious metals, all the assets, I see that happening like rapidly and turning into a $200 trillion space. And that's actually conservative in my view. I think that's conservative. You have so much money out there looking to throw into there. I just see it as an opportune moment. So that's what I'm doing. I have just to and you don't have to sign up for anything of mine. I have nothing, don't have anything to sell you here. If you could subscribe, would really appreciate it. If you could follow me on Instagram, I'm giving a lot of heads up on the Instagram thing. I really am pushing that because it's nice to have another place to give notifications and Instagram's kind of cool because I'm a photos person. I'm in collectibles, so I'm taking photos of all types of collectibles. So it's kind of cool to have all my stuff there. So if you're interested in what I do for a living and how things operate with me and what I'm buying, what I'm doing with my life sort of thing, and then also the notifications, I'm putting in the story every time I go live on YouTube so you can get a notification there if YouTube doesn't notify you. I've been told this a lot. Hey, YouTube didn't notify me for this video. I have the bell clicked and everything. So make sure you do subscribe. You do have the bell clicked for future videos. In my videos, I want to make sure that they're well researched. Like I spent this entire morning, even though I have a bunch of videos to shoot and I have a bunch of things to do with my day, I spent the entire morning studying this stuff, studying these charts and finding, it's not just knowing what you're looking at on these charts, but it's also finding them because they don't want to talk about this information. The traditional ways of getting information don't bring this stuff up. And so it's like, and once you finally look it up, you're like, wait a minute, this guy is full of it. This guy, what? He is full of it. There's no way. Are you looking at the same chart that I'm looking at, pal? Because this is bananas. Anyway, just my opinion. But If you could be so kind to click that subscribe button and the bell afterwards, you'll be notified of all future videos. Would really, really appreciate it. And if you could follow me on Instagram, I'm giving a heads up whenever I do go live there, just in case you don't get notified here on YouTube. And I have a lot of cool stuff on the Instagram as well. Probably going to do some exclusive. I already do like exclusive photos, and I can DM with people on there, which is cool to be able to talk to the community on a personal basis with the Instagram. So if you do that, really appreciate it. But let's get to some comments for a little bit. We will get to the comments. I actually haven't looked at any of the comments. I've been rambling this entire time. I don't know how long I've been rambling for, but we'll keep the comments going for another 5 minutes or so. I want to keep these live streams a little bit shorter, even though it's about an hour, so a little bit longer of a live stream. But I'm going to go through some comments right now. I think actually I missed a super chat a little earlier. Zane, I appreciate you, man. Let me see what you said. According to the World Economic Forum, you'll own nothing and still be happy. I still think it's going to be worse. Future doesn't look so good. It's hard to it's all good. Everything's all good. I hear you. Yeah, it's very, it seems to me like just a opinion, just a hypothetical. It's almost like if I wanted to do everything in my power to make it extremely hard to get wealthy, if I wanted to do everything in my power to make the divide from the middle class and the poor from the wealthy, I would do exactly what has been done over the last 2 years. Like if I was playing a game of diabolical chess, to the point where it's like it might have been even better than the way I would have done it if I was on the opposite side of the chessboard. Like if I wanted to make that wealth divide further than ever before. And ironically, you got all the people out there that are thinking, oh, well, tax the rich. Well, by listening to these morons that you thought were on your team, by taxing the rich, you just made yourself broke and them filthy rich. Because you don't have assets. If you're out there screaming tax the rich, you got no assets. And guess what? Their assets just went through the roof. That stock market skyrocketed. And who had stocks like that? The rich did. They had tons of it. Why do you think Elon Musk sold out of his stock right before it started plummeting? You know, he had some information. He was interested in some stuff. But it's like, it makes me laugh. It's, oh, tax the rich. And then they make him uber rich. It's like the most foolish thing ever. But anyway, I think that this is like the perfect scenario. If I could design the perfect scenario to make the wealth divide further than ever before, to make the poor more poor than ever before and the rich more rich than ever before, I'd do exactly what the Fed has done. I would do exactly that. I'd print the 14 trillion. I would drop interest rates down to zero. I mean, that makes it easy for them to get a loan. It's free money to the rich pretty much. And you have a situation where the money that the working class is working for, the working class is working for money that is the working class is working for a wage that is deflationary. So it's the same wage or going down, and it's being paid in an inflated, diluted currency. That is not what you want. You want the opposite. You want your wages to be inflationary, and you want the currency to be a safe haven. You want the currency, that's why our currency used to be back to precious metals. You want the currency to have the deflation. You want the wages to have the inflation. But here we have wages that are the same or going down and being paid in a diluted currency. Very scary scenario here that is very obvious that it is trying to divide the rich from the poor. So that's what I have to say on that. And we're still live right now. Look at that. How's the live stream quality still? Is it going okay? I'm pretty hyped that we're still able to pull this one off. Set a YouTube reminder, time for video to start so people can be here when the live stream comes on. I agree with you. I'm kind of like, I'm impulsive at times. Basically, sometimes I get inspired to make a video and I go, I'm going to make a video. That's why I'm telling so many people to follow me on Instagram. Because if you go to my Instagram right now, like if I showed you, let me show you real quick what I've been doing. If you go to the Instagram right now, so I was really hyped about getting 25K. So that was my last post on Instagram. And look, 2 of you follow me. We got 260 people in here, and 2 of you follow me on Instagram. I appreciate the 2 of you. Thank you to the 2 of you that followed me. That means we're making a difference around here. But if you go to my story right there, so if you go to my Instagram, that's the Instagram. But if you go to stories and you click that, See, I was showing that, and then I was showing. See that? Hang on. So on the Instagram, basically, I put like a heads up. Hey, I'm going live in 10 minutes. So if you want a little heads up reminder, I'm putting those in my story on Instagram where I'm basically like, hey, I'm going live in 10 minutes. And I didn't even know I was able to put a link in it. So I figured that out recently with Instagram. I could put a link to link you to the video. And so when I drop videos, I'm going to put a link in the story over there to help people see and get notified when I do drop a video. So it's giving me an extra thing. I know a lot of people, some people don't use Instagram. It's really, really cool for collectibles, and it's really cool to give people an extra notification. Specifically for collectibles and what I'm into, like if I'm showing watches, I'm showing silver bars, gold bars. Like if you want to see what those silver bars look like, go to my Instagram. If you want to see what my watch looks like, go to my Instagram. You'll see the stuff that I'm buying in collectibles. And some people, they think I bought this watch to be gaudy. I got an offer on this specific watch, the exact one I bought. I bought it full set with the original paperwork and everything for $5,000 more than I paid for this watch. Just recently. And I bought this watch like a couple months ago, or not even a month ago, maybe it was a Christmas gift to myself. So about a month ago. Some people think I buy the watches to be gaudy or something. It's like, this has been a great investment. This is, all my watches have been going up so much in value. It's crazy. But you have to be very specific about what you're buying. But if you want information on what I'm buying, how I'm buying, I'm on my Instagram. I share that information and kind of share what I'm buying personally. But 2 people use Instagram. Amazing. Well, if 2 people followed me from the 241 in here right now, I appreciate you. But I'd appreciate it if 200 of you follow me, because then I have the other thing too is diversity is a good thing. You catch what I'm saying. I mean, if you have Twitter following, you got some Instagram, you got YouTube, you got a little bit of different places right there that's what I'm looking for. That's kind of, yeah, it is Zilla. It's a really good spot to share your collectibles and stuff like that. It's good. It is gaudy. Yeah, I won't deny it. It is gaudy. I think it's pretty cool, but at the same time, it's an investment. I don't buy something like this. Like, I don't buy fancy clothing. You won't see me in like a Versace, something like that or whatever. I don't wear that because that stuff is you're just buying it for clout. You're buying whatever it is for clout. But this, it might look like it's for clout, but it's actually a good investment. So if you bought a watch and it's bedazzled with a bunch of diamonds and crap in there, and it's not all original, not factory, you don't have the original full set, you don't have the original box, the original paperwork, all that stuff, then you're not making an investment. Then you're just trying to show off. But if you bought it with all the original everything, anyway, I don't want to get too into like collectibles and whatnot, but let me get to a few more. Nick, you're right, Nick. I know it's pretty ridiculous, but right now those are my options. All right. But I hear you. Salvador says I like watches. I do too, actually. I didn't used to be so much into watches. You know, Free Like Summer. I'm actually trying to bridge that divide. I think that I think if I ran that site. If I was and some people have been saying that like, you should be the Wall Street silver guy. Anyway, if I was running it, I would try to bridge that divide because I have immersed myself in the Bitcoin community. I've immersed myself in the silver community. I have a lot of both, and I have to be real about it. If you want something in the digital realm, silver can't be in the digital realm in the same way that Bitcoin can. So they're actually not enemies; they're allies. These two things are allies, and the community I hope the community eventually understands that. I mean, I bought like a 5-10% position back when Bitcoin was like 7,000, 8,000, and these videos are posted. And I kept buying around 10, 11, 12, and I bought like all the way up to 60K, but I bought such a big position of like a 5-10 position of my net worth I put in Bitcoin, and then it just went up so much from that point that even on this pullback, I'm still up a lot. But it was an insurance play to have money. I see Bitcoin. This is how I genuinely see it. I see it as an insurance play to have a digital asset outside of the traditional banking system. If you don't have Bitcoin in cold storage, then you're just a fool. But if you do have it in cold storage, you have digital money outside of the traditional system, which is amazing to me. And I think that it's foolish to think having none of that is a good idea. To have no digital money outside of the digital system. The system's already 90% plus digital. So to have none outside of the system, going all in on that digital, money outside of the system is foolish in my opinion. But to have none of it, that's equally foolish. So I don't like the whole silver community bashing the Bitcoin community bashing the silver community. I'm seeing actually lately, I'm seeing a lot more people that understand it makes a lot of sense to have a little bit in my portfolio in cold storage. It makes you feel good. It makes you feel good knowing I have a little bit of that in a cold storage device, especially when you have places like El Salvador accepting it as payment. If you go travel to El Salvador right now and you have Bitcoin in cold storage, you can literally spend it to buy a McDonald's or a Starbucks down there right now. It's pretty wild. And if more countries start doing that, it makes sense to have digital money outside of a corrupt digital system. Anyway, but doesn't change that I have a ton of silver. It doesn't change that I love silver and I love collectibles. I think it's foolish to not have a small position in Bitcoin. That's how I feel. But that's really where I'm at. It makes sense. It's like you're talking about a $15 trillion or less basket against hundreds and hundreds of corrupt trillions of dollars out there. Like, why is it a headbutting match? These are both great places. The key, like when somebody asks me, okay, well, I believe what you're saying about the Fed. I believe the market might be in a situation where it might collapse. What are you doing? Like, what are you doing to protect yourself? I will be totally real. We have 244 people in here. I will be totally real with you. I am wanting to be 20% cash, maybe even 30% cash, which goes against everything I believe in my mind. But I think that it is very, very beneficial to have powder dry right now, to have 20, 30% powder dry. And what salesman would tell you that? Have some dollars on the sideline ready. But on top of that, I have silver, I have platinum, I have palladium because I believe in their industrial use. Palladium's been in a deficit for and that was a great opportunity on that pullback on palladium. I wish I got a little bit more of a bite out of that. But palladium has been in a deficit for 6 years. So I want to be in the industrial precious metals. Silver's being eaten up like never before. So I want to be in those industrial precious metals. If I have to choose between which precious metals I'm going to be in, I'm going to choose platinum and palladium over gold every time with silver as number one. So these are the things I'm doing. And then I also have a large position in Bitcoin. Now, my Bitcoin position got very large because I bought a 5-10% position at a much lower price. So it jumped up to being much higher percentage. I would have, if I hadn't bought early as an insurance play, which I still see it as an insurance play, to have money outside of the system in the digital realm, I would probably be 10% right now. But it's much more than that because I got in early. But that would be what I would do right now, and then 20% silver, 20% platinum, 20 or maybe 25% silver. Anyway, you get what I'm saying here. But that's pretty much what I would do. And I don't own any real estate right now. If I could, I'm tempted if it's anyway. I don't want to get into all of that stuff. But if you're talking about where is my money, so to speak, that's where my money is. That's where I'm at. So if you want me to just tell you exactly what I'm into, you can buy all the Patreons out there. You can pay for all these courses of Meet Kevin or all these guys out there. But I'm just going to tell exactly what I'm doing. That's exactly what I'm doing. And I'm building my business. I'm building Mineral Exchange. So sign up to the email there on mineralexchange.com or mineralx.com, which I recently acquired. Pretty stoked about that, like SpaceX, but mineralx.com. But if you want to see more information on what I'm building, my company and all that, go to my Instagram. You'll see my link to Mineral Exchange and all of that. So I'm more focused on building that than I am on individual investments. I think people need to focus on building stuff. Build a business. If you have an idea, build that. Figure out how to get cash flow. More entrepreneurs need to succeed in today's day and age. We have supercomputers in our pockets. Why is only 10% or 5% of entrepreneurs succeed? I don't understand. You have a supercomputer in your pocket. That statistic should be way higher. There should be 50% of entrepreneurs succeed with these kind of tools in our pockets. But anyway, I'm rambling now. Yes, I do prefer silver over gold by quite a bit. And I'll break it down exactly why I prefer silver or gold. Silver is over 70% industrial. So over 70% of silver supply is being eaten up by industry. So it's actually being put in solar panels, actually being put in electronics. You do a little bit of gold. But when you're talking about gold, when they say, oh, well, they put in electronics too, 5% of it. You got to remember, gold is a 10 to 12 trillion cap. So if you have a cap over $10 trillion, and only 5% of it is being eaten up by industry at best, and most of it's jewelry and stuff. But then you have another one that's 70% eaten up by industry, not as monetized, but it was a monetary metal, but it's eaten up by 70%. And then on top of it, the market cap's only around $1 trillion, a little bit over $1 trillion. I'm going to go after that one. That's 1/10 the size. I want to be in the one that's 1/10 the size and being eaten up at a 70% rate, instead of the one that's being eaten up at a 5% rate that's already being held in central bank vaults. I'm more in silver right now. But I think gold will steadily go up. I do think it'll go up. I just think it'll be a slower horse in the race. So if you want slow and steady, I think it's going to be gold. If you want something that's slow and steady but also has the potential to skyrocket, I think it's silver. And if you want something with the potential to really, really skyrocket with a ton of volatility, though, that you have to deal with, it's Bitcoin. So it's like that's kind of how I feel about these. And I just tell it like it is. I'm not going to tell people I'm not into Bitcoin when I am into Bitcoin. I'm not going to tell people I'm not into silver when I am into silver. I just tell it exactly how I see it. I'm just try to keep it real with everybody, and that's why I do these live streams. A lot of people have to edit their videos. I like just doing these live streams and shooting off the cuff, you know. Meet Kevin subscribes to Rob for content advice. I don't know about that. Meet Kevin's he's a big dog, you know. I'm a small minnow out here in the YouTube community. That's why I just try to. The best thing I can do is we might be small. We might be a live stream that doesn't have 7,000 people in it. We might only have the 250 of us in this live stream, but we're a strong community and we keep it real around here. And the comment sections, I've been watching the comment sections in a lot of these big live streams, and they are not as cool as these comment sections. Like, it's cool. Like, I'm talking, you can hear me blab a little bit, but when you're reading the comment sections in our live streams on this channel, there's some really good information in the live stream. If you notice that, there's some stuff in there that I'm learning stuff all the time by just being in the live stream. The comment section is rad. That's why you have the option when you go live to post the live comment section. So if you watch the video later, I always post my live streams, but I actually also make sure that I allow the comments that are in the live stream to be viewed at another time too, because you can take those away and only allow regular comments, but I allow both. So you can actually see the live stream comments at a later time, because I think they're so beneficial when in the live stream. Because when I'm talking about something, there's stuff that I forgot about and there's stuff that I didn't bring up, and it's really good for the comment sections. Some people saying BTC bottomed. Well, here's the thing about Bitcoin. We have to be honest with ourselves about Bitcoin, and I believe that it'll eventually stop being correlated. But look at the market. Like the Bitcoin crashed with the overall stock market. Look at that buy. Holy crap. Somebody bought a huge position in Bitcoin. Jesus, look at that candle. Whoa. Yeah, like 11:15, 11:10. Wow. I didn't even notice that at first, but the market sold off, right? Market sold off, and so NASDAQ sells off, rebounds. Bitcoin sells off, rebounds. Like, it literally is following the exact chart. The daily is, you just see exactly correlated with the equities, which is not what I want to see. So if you look at the daily here, it's like equities sell off, recover. Bitcoin sells off, recovers. I don't want to see that type of a correlation. So even, I've been posting this on my Twitter too, and my Twitter is there's a lot of Bitcoiners there, and they agree. It's like, we got to get off this correlation type situation. And the only way that there isn't a correlation with precious metals like silver, platinum, palladium, gold, and Bitcoin is if we stop being in these ETFs. People need to stop being in ETFs. You got to stop being in the SLVs, even the PSLV, because I don't want that data there. I want to have more people take possession. The real way that you fix a system is by having individuals be sovereign and take custody of their assets. We need to see more individuals take custody. If you have your Bitcoin in Coinbase, or you have your Bitcoin in Robinhood, even worse, and you call yourself a Bitcoiner, you're a fool, in my opinion. An absolute fool. If your Bitcoin is sitting there in an exchange and you call yourself a Bitcoiner, oh, I believe in Bitcoin. It's like, no, you're a fool that contributes to not being a Bitcoiner. Like, you have to have it in your own cold storage device. Then you understand Bitcoin. And there's tons of information out there. Maybe I'll even put a few videos out there with cold storage and stuff. But if you say you're a silver stacker, oh, I believe in silver, I'm a silver stacker, but you buy SLV, you're a fool. In my personal opinion. Like, have the real thing. If you don't have the brick on your shelf, you don't own the silver. That's the reason why silver suppresses from trusting these ETFs. Who owns SLV? None other than Jamie Dimon, JP Morgan. You know, like, the ETFs is the problem. Even if they're spot ETFs too. And Bitcoin doesn't even have a spot ETF now, so that's scary. But that's what more people need to take custody. And I'm sure I have a lot of Bitcoiners in my audience too. And it's like, if more people don't take custody, then you're not proving the vision of what you're trying to do. You have to take custody of these assets. If you don't, then you're contributing to a corrupt system, in my personal opinion. Anyway. Yeah, I said that live. It's coming. Anyway. Let me get to a few more comments. We'll do a few more comments. Normally I'll say around here, I'll say some cheesy line like if we get to 250 likes, I'll keep it going for another 30 minutes. But we've gone for an hour and 14 minutes, and I like to post these live streams so other people can watch them at a later date if they miss this one, if they're busy. So I don't like to, because if you click on a video and you see it's like 2 hours or something, it's a little bit too much. Let me see. I'll go through a few more of these comments. Hey, Rob, great content. Keep it coming. Appreciate that, Michael. Thank you, man. Ray says, small audience, but big brain. Seriously, the comment section is serious big brain going on in the comment section. And honestly, I've been getting a lot of DMs on the Instagram saying, I didn't realize how cool, it was to have both, to have silver and have Bitcoin, to have platinum, silver, Bitcoin, like have all of it together. But I feel more like safe now in a way because I have all of it. It's like I never have been that person to be like, yo, you have to be all in silver or you're a fool, or if you have to be all in platinum or you're a fool, or if you have to be all in this, no dollars. It's like, no, I think you should have some dollars there. I think you should have 20-30% dollars ready to throw at something when the opportunity arises. Right now there's an opportunity in Bitcoin, there's an opportunity in silver. It made sense to have some cash dry over the last year. But do I collect NFTs? No, I think they're very foolish. There are some NFTs that they're using as keys to get into a club. So there's something a little bit different there. So when you're talking about just the artwork, that's not what I'm looking for. But I saw like the Nelk Boys did something where they did a drop of a few thousand things or whatever. But it's not about the picture. It's that it gets you into their club. So if you want to get close with that group or whatever, you have that picture as a key to get. Because I don't want to just be closed off. A lot of people are closed-minded. I'm trying to find the things that actually make sense. Because if there's this much money in that ecosystem, there has to be some stuff that makes sense. I see it as something that is on a blockchain where it's like you can prove you're the person that owns it, so you can use it as a key to get into a fancy club. For the Nelk Boys are using it as a key to get into their clubs. So that's interesting, it's almost like it's a status symbol. Like there are people like a Richard Mille, for example, who I bought this Rolex because there's a lot of gold in it. There's a lot of gold in it. I think it's undervalued. I thought it's super cheap for what a vintage president was like the coolest watch ever when I was a kid. So I'm like, that's what the Sopranos wore. He wore a champagne Rolex president. I want one with the black dial. I want to have that same Sopranos watch. But anyway, there's people that buy like a Richard Mille, and they pay like $2 million for this piece of plastic on your wrist. And when you see, like when you actually hold a Richard Mille, when I held a Richard Mille for the first time at my buddy's shop, I'm looking at it, I'm going, this is $500,000. Wow. People are foolish. Like that to me was like worse than any NFT. I was like looking at the Richard Mille going, this guy, whoever this Richard Mille guy is or whatever, he really figured something out because he's selling pieces of plastic for $1 million. I'm in the wrong business. That's what I thought when I looked at a Richard Mille watch. Richard Mille. I'm going, holy, that's crazy to me. So it's like people will spend their money on some stuff, but the interesting thing about that I saw with the NFT community is that it's using it as a key to get into somewhere. So like the Bored Ape Yacht Club one, right? That's like celebrities have that. So you're in a certain clique of like celebrities. You're with Eminem, you're with, all these people that have their Bored Ape Yacht Club things, Jimmy Fallon's and all those people, they have those specific ones. So you kind of get into like a certain club of hierarchies or whatever. So there's that, but I don't believe in the overall market. I think you're buying a JPEG that you have proven your rights to this JPEG. I mean, you could hire a graphic designer to produce 100 of these for $20 a pop, and you could, make your own drops. And I mean, there's nothing fancy there. So I don't know. There's no NFT out there that would get me. I personally, the hustler in me looks at the NFT market like, I know collectibles. I know how to make I know when something's hot. I know how to make a sale. I could flip these. But I'm looking at it from a flipper's perspective. I'm not looking at it as a holding perspective. So if you're a flipper, there's probably some money to be made in these. If you're a designer, probably some money to be made in these in the short term. But I'd be a flipper. I wouldn't be sitting on them for long term, unless it's a key to get into somewhere. It's like you want there's a certain club in your neighborhood that's like a fancy club, and the Nelk Boys are in control of it, and you have to get one of those NFTs to get in the club, and that's the place you want to go. Like I can see that. But other than that, other than getting in the club that you want to get into, I'm not into it. I know. You can screenshot an NFT, but you can't screenshot the key that gets you into the club. So that's interesting to me, but I do agree with you. That's the only thing that I can grasp with it. Yeah, Richard Mill equals Invicta for rich morons. I agree. Silver's Murpher, you're exactly right. I did miss that super chat. Zero defects. Zero defects. I see what you did there. He gave me a super chat for $5. I appreciate that, man. Thank you. I never like to miss those super chats, so if I miss one, let me know. I think there's only two of them. This was the other one. Hang on. Rob, have you ever thought of doing a video with David Morgan sometime? He does a bit with crypto with precious metals. Funny story about that. As soon as I said that it's a good idea to have both, I don't believe in crypto. I believe in Bitcoin. There's a big difference. Crypto is not Bitcoin. Bitcoin is Bitcoin. There's only Bitcoin. Everything else is just not Bitcoin, in my opinion. But people that say crypto usually aren't that informed. That's my personal opinion, though. Maybe I'm the one that's not informed, but from my research, and I spent a lot of time, I probably spent over 1,000 hours studying Bitcoin and studying all of the cryptos and everything like that. And Bitcoin is not crypto. Crypto is like a term to loosely define blockchain-based things, but Bitcoin is its own animal. It's funny. That's funny. I started talking about crypto and precious metals, and then you got like the what's his name? I did a video like why I thought platinum was a good investment, and he was against platinum. I thought platinum is a good investment. Why is this? Maloney. Mike Maloney, I think. He started talking right after I started saying, hey, it's a good idea to have both. He's like, I think it's a good idea to have both. You know, so maybe he saw that video on platinum and he started watching. I don't know, but I'd be happy to talk to anybody. You know, I talked with the guys like those Wall Street Silver guys. I talked with them. They're very much against Bitcoin. I'd be happy to talk to them about Bitcoin and whatnot. I don't know if they're up to that. I said I was up to it. So if they're up to it, I'm up to it. I tried to show a little bit of I recently joined or whatever and started posting a little bit over there. So try to show some love, but I'd be happy to talk to anybody really. I'm not hiding from anybody. People hide from me. I'm just kidding. I'm sorry. Sorry, my ego. Did my ego take over right there? I'm sorry. I want to debate these individuals that are against Bitcoin or like opposed or whatever, because it's like once you understand both, that most people that are like adamantly opposed to silver haven't studied silver. Most people that are adamantly opposed to Bitcoin haven't studied Bitcoin. I've noticed that. Like Peter Schiff hasn't ever played with cold storage and like sent Bitcoin from wallet to wallet and like understand what it's like to have digital money outside of the digital banking system. Banking system digital. I want digital money outside of that digital banking system. That's how I see Bitcoin. It's having capital outside of the traditional banking system. Makes sense to me. Makes a lot of sense to me. Especially when you verify it with your own node, you have your own cold storage, then it makes a lot more sense. And then when you understand how ridiculously like outdated the Fed wire system is, when you look at Bitcoin like a wire system where you sign a wire yourself, it makes you realize like, why isn't it like this with regular money? Why can't I just put a code in on my bank account and instantaneously send my money over the internet? Why do I have to use this stupid Fed wire system? Why can't I just put a little code, like copy, paste, boom, send it over there, pay them? Why can't I do that? Why do I have to write a form like 2 pages long of, their banking information, their account, their routing number, their address of their business, their regular address, like their name. You have to do all of this stuff to do a wire transfer where you could just copy paste a script, boom, done. So like Bitcoin, when I saw it move like that in minutes, seconds, I was like, okay, that's bananas. That's the best wire transfer system I've ever seen. That's how I looked at it, like an advanced wire transfer system that's trustless, that's peer-to-peer, and there's no going backsies. That's what I like about it. Is once it's done, it's done. So you can get deals done and you move on, and you can trust that you actually got it and verify that you actually got it. There's a lot there that people overlook, but I'm not. I was one of those individuals that took like I don't know if people remember in the chat here, but I took like 2 weeks off to study Bitcoin, like 2-3 weeks, just to only immerse myself in Bitcoin because I thought it was that interesting. I didn't make videos, didn't do anything, didn't make sales or anything like that. Just turned off my life for like 2-3 weeks and just only studied Bitcoin, read the Bitcoin Standard, read all these books on Bitcoin. And I mean, it mixes so well. Like even when you read The Sovereign Individual and all that stuff, you go, okay, this makes a lot of sense. Like I want to have money in the digital realm outside of the system. Made sense to me. So most of the people I've noticed that are like really, really against Bitcoin, they haven't spent the time studying it. And same thing with people that are against silver or against platinum or against palladium. They haven't really looked into the market reports and all that stuff. And I try to share that on my channel. Like I've made videos on platinum and palladium where I share the real data on it. So if you're not subscribed to the channel, please do click that subscribe. Really appreciate it. But a lot of these videos are posted. So if you just go search through my channel, you can see that. Is the soft confirmation the email you get sent from the exchange? No. Well, a soft confirmation, it could be on the, I guess, but really a soft confirmation is you know that it's on the way. It's not confirmed yet. So if I sent it from my wallet, my cold storage wallet, it would show when I look up on the Block Explorer rather. So you can look up on the like the meme pool, the Block Explorer, and actually see the transaction going through and that the transaction is pending. A soft confirmation basically tells you, hey, your wire transfer is on the way. They sent it. It's on the way. It's out of their hands. They can't get it back. It's on the way. It needs to get confirmed. And then it'll show you that it's confirmed after a soft confirmation. But that to me was like so far advanced above the Fed wire system, where it was like, okay, a Fed wire system, you're running around like hoping the wire lands. And when it lands, it lands. Like it doesn't tell you, hey, they sent it. They can't get it back. It's on the way. That's what a soft confirmation does that the Fed wire system doesn't do, which is very interesting to me and a powerful technology. But anyway, guys, I don't want to talk too much about other subjects. I wanted to get this video out here to get this information. I want to do this live just so I could post this video for everybody wondering what I think of this meeting tomorrow. Long story short, I think he's bluffing. And I think if he does raise rates, we might see the market really start selling off. And really, this market is dangling. It's just dangling. Like it's just waiting to get a correction. So I mean, I guess I'll leave you with that. I'll go back to this trading view over here and show you. I mean, we can go to the NASDAQ really quick, and I'll just show you just how far this is dangling. You go to the year to date. I mean, this thing is just a mess. I mean, look at how much room it has to drop. It's like I can't believe people in equities are like, oh, this is just a minor correction. This looks like a minor correction to you? Like this really does? Hang on, I'll put me over here. It's like that. This is when they started the money printing. They injected 14 trillion. They have 8.8 billion sitting on their balance sheet that they want to dilute the system with. They want to actually tighten, which means unwinding that 8.8 trillion on their balance sheet. So they printed 14 trillion. They got the 8.8 trillion on their balance sheet rather, and they're looking to unwind that and dilute the system as the system's starting to pull down. And then not only that, but then raise rates at the same time. This looks like a good scenario to you guys. Like in the equities, this looks, I got to side with Meet Kevin here. I mean, Meet Kevin, he had everything, every single possible reason to stay in the equities market. He's making money off of it. He's making money off doing streams every day saying, I like this stock. I don't like this stock. I like this stock. I don't like this stock. And he sold off all $20 million he had in the market, probably because he looked at the same chart and looked at what's happening here. I think this is a fake pump. I think it's a head fake. Just long story short, because I'll pull back to the 5-day real quick. I think this is a head fake because you have the market starting to panic, selling off, and a gap down, gap down, gap down. And then you have this little head fake where it was gap down this morning. This wasn't yesterday. This was this morning. This morning it was pulling down huge. I even made a post on my Instagram about it. And then it skyrockets right back up to 14.5. I think this is a head fake because the equities market or the people that run this equities market type situation are nervous because they're feeling like, okay, we got to get Powell so that he won't raise rates. We got to put Powell in a position where he wants to, not raise rates, sees things that are fine and doesn't do that. But to me, it's just a head fake before the meeting. And I think that the meeting, it's a lose-lose. There is no good information that they can say. They can only delay bad information or give the bad information. So that's everything I wanted to talk about in this video. Appreciate everybody for being here. Appreciate everybody in the comment sections. Thank you everybody who smashed the like button. If you're in here, if you're one of the 200 people still in here and you haven't smashed that like button, would appreciate it if you did. If you take that 1 second to hit the like button, it helps get my videos out there to more people and really, really does work because the last time we did this, the video actually got out to a lot of people, so I appreciate that. And that's what helped me get over 25K on the subscribers. So we broke 25K. We had a quick jump on the subscribers, actually. We went up like 800 subscribers or something in the last couple of weeks, which is pretty cool to see it starting to get some momentum again. And I think these live streams have a lot to do with that. So thank you, everybody, for all your support. If you're not subscribed, please do click the subscribe. I I really would appreciate it. I know I said it, and some people are like, I don't know if I'm going to do it. If you do click the subscribe, please do click the bell afterwards. Would really appreciate it if you did do that. It helps the channel a lot. Hit the like. Follow me on Instagram if you want some more information on the collectibles and all of that, and another place to get notifications when I do these videos. Rob Sultan on Instagram and RJ Sultan on Twitter. Follow me there, and I will see you all at the next video. Signing out.